How's it, everyone? Thanks for tuning in. Let's talk bonds today. Now, bonds are breaking out. The 30, 10, 5-year, all of those futures contracts are trading above the risk levels I mentioned last week. And the bond's sending a clear message to all of us. It's time to buy bonds. So with that in mind, let's take a look at the most heavily traded bond ETF out there, TLT. Zooming out on the weekly chart, we have a potential failed breakdown below the 2014 lows last year. And since then, a nice tight multi-month consolidation. Now, if and when TLT decisively closes above 110, the path of least resistance is higher. On the other hand, a breakdown below this 101 level risks are to the downside towards 88 and those former 2011 lows. Now, based on the 30-year bond, the 10-year and the 5-year T notes, and the 2-year is really not far behind either. Looks like it's going to break out today too. Just based on the overwhelming evidence, I'm leaning on an upside resolution here in TLT. So where are we wrong? Where are we right? Let's zoom in. Here on the daily chart, we have a very clear polarity zone around 110, 109.75. Now that's marked by the June pivot lows from last year and a series of pivot highs from the past 4 or 5 months. It looks a lot like the charts I highlighted last week. Right? Makes sense. They're tracking the same markets. Also notice the momentum is holding within a bullish regime as the bulls continue to challenge this 110 level. That tells me that the bulls are in control and they're slowly digesting all of that overhead supply. Right, so if and when, again, TLT above 110, like it long with an initial target of 120. Now, I might say, hey, Ian, that's a $10 move. What kind of move is that? Why don't I want to trade TLT? And the answer to that, bonds aren't supposed to be exciting, right? Trading in general really shouldn't be exciting. But the bigger picture is that we're adding bonds back to our portfolios. And it's not just TLT, it's IEF, it's IEI, it's across the curve, right? That's a big signal. Now these formerly safe haven assets are actually providing a haven again. Right? That's a big deal for the 60/40 portfolio. And it's just it signals that we can actually start to get back into these assets. Now, what does that mean for stocks? What does that mean for risk assets? It's really not a matter of money flowing into bonds. It's more a matter of how the money flows into bonds, meaning it's the pace. Stock market bulls do not want to see a rip-roaring rally in TLT or any bond ETF or futures contract, period. Right? Slow and steady is the pace that stock market bulls are looking for when it comes to bonds. Right? That's what it really comes down to. So for now, keep an eye on bonds. Keep an eye on TLT. Go back, check out our recent posts. Look at the futures contracts. Look at IEF and IEI. These are areas that we want to start buying and bringing back into the fold. But at the same time, watch to see how they're trending. It's very, very important. I can't overstate how important that is. Stocks do not like bond market volatility. So a nice, slow rolling breakout and a steady climb of what stock market bulls are looking for. Something we need to pay attention to. Thanks for watching. If you have any questions, please reach out at info@allstarcharts, and I will see you next time. Have a great day, everyone.